Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three. We're seeing a lot of selling on Wall Street, but we're going to take a look at three stocks, three charts, three trades for your portfolio. Let's take a look. Ben Watson will take us through the charts. And here to take us through the trades, Mike Shorr, Director of Trading Education at Prosper Trading Academy. Great to see you both. Mike, what do you make of this market? Our last guest seemed saying, stay the course. He seemed like he had some good ideas for the long term for more bullishness. Thoughts?
Yeah, you know what? I agree with him. This is not freak out mode, and yeah, it's a little bit soft. So what does that mean? You go and you look at names that you're like, well, I can't buy it, all the way up here, and so now we have that opportunity. This is not freak out mode for me.
Understood. All right. First up, you have Celsius. It's at 34.70. We've had the CEO on many times. Some of your thoughts about this company?
I was just talking with one of our other traders, my good friend Charlie Moon, yesterday, and I've never even had one of these, but it's everywhere, and so I am looking for that reason to get back in. I played it a number of times in the past, and now it's off a little bit today, but I'm looking for that breakout.
Understood. It's been beaten down. Did very well, made a great deal with Pepsi, got some really great product placement and distribution, but has since really faltered. And so now you're seeing the opportunity maybe to buy back in. Interesting. Okay, let's see what Ben Watson says about the charts.
Hey, Nicole. Yeah, Celsius, I think, is one of those names from a distribution standpoint, from a placement standpoint. You see it everywhere. I think that's a good comment. But you don't see a lot of movement on the chart other than this kind of classic rounding bottom base building that it's been doing, really since the September-October timeframe, and kind of starting to make that move back to the upside here. On the February earnings announcement, we got this pop, and then it sells off from the resistance, in this case, right about that 36, 37 level. Now testing that area at the moment, we're sitting at 34.65, so right under that 35.36 range, with the potential for this to move higher. Now, over on the right-hand side of this chart, Nicole, I've got the volume profile study, and you can see that the majority of the activity that's been happening over the course of this year has been below that 35 level. That's volume at price. And so there's been a lot of base building. Buyers have been stepping in, nibbling, and building positions. Once it breaks out through that 35, 36 area, if it can, there seems to be kind of this volume vacuum, and that would suggest potentially that opportunity for this stock to make a fairly quick move to the upside. Doesn't have to by any means, but sentiment has been building in the RSI. You've got a lot of kind of volume vacuum, kind of like popping the lid, the can on one of their fizzy energy drinks, seeing that potential bubble up from this 35 range here, Nicole.
All right, thank you for that. So how would you go about trading this here at 34.58 today, Mike?
Yeah, it looks like we're looking at the same charts. So my breakout price to the upside is 35.78. And then I would look at just going out to a regular April, so 4/17 expiration, 37.5 40 call spread. You should be able to get that for about 60 cents. That's going to give you over 3-to-1 risk to reward, actually 3.17 if you want to get technical about it. But and we just, to be cautionary here, you can tell that the price is sitting there. So it can easily come back down. Wait for the market to make that move for you and go with it.
Okay. How about next up? We talk about Netflix. So we see this chart. It's been giving it a go over this 1 year, some choppiness lately. Some of your thoughts, Mike?
Same thing. I haven't been able to buy Netflix for a long time, and now it's starting to look like there's some room to the upside here. So this is the same kind of theme here for the wish list type of trade, where they were outperforming basically all year, and you're just like, well, wave high to it, and as it passes you by, because you can't rationalize these prices. Now we're getting to the place where I think we can buy this with some value.
Oh, okay. So some opportunity here to the upside. What do you think, Ben?
Well, Nicole, long-term uptrend. I mean, we've seen their advances in subscriber acquisition and resolving some of the password sharing issues that's been driving revenue. That's been driving share price up. You've seen a couple of earnings announcements that have had strong pops to the upside gaps and then run. Most notably, the January earnings, you saw that big gap up, and then it ran to the yearly high, the 52-week high here, up around that 1,064 mark. But I think therein lies the problem. That may have been the short or maybe kind of intermediate term topping pattern here, because there is the potential for this to be building kind of a lumpy, kind of intermediate term head and shoulders reversal. The reversal comes if it breaks below kind of this 850 level. It's far from there at the moment, right? It's sitting on levels of support and resistance. So I think in the short term, you've got the possibility, if it can bounce here, and today's candle is a sell-off with a little bit of a tail on it, and so there's some buying stepping in, this could potentially be a short-term bull flag. That bull flag could take this back up to the previous resistance right around the 1,000 mark. 1,000 is significant because it's a big round number. Investors, traders like big round numbers as levels of support and resistance, simply from a psychological standpoint. So if this can break through 1,000, it's at 948 now. If it can get a bounce and break through 1,000, then there's that potential for it to maybe make that move back up to that range, that 1,064 mark. But you can see again with the volume profile, there's a big volume spike right there, right around the $1,000 mark. If it goes below that, maybe look for it to come back down and retest the 850 level, which is that kind of neckline of this head and shoulders potential, Nicole.
Yeah, thanks for that. I mean, look, we watched the 1,000 mark. First, you got to get to 1,000 to get near the highs that it hit of 1,064 back in February. So let's see here, Mike, where do you think it's headed, the trade?
Well, again, I'm waiting for the market to do some of the hard work for us. But it's funny, I'm looking at the exact same level that Ben was looking at. So I'm looking at, if we do get that breakout, and that would be above 989 for me, and then targeting that, Ben said 1064, 1065 with $1,000 stock. I think we're basically in the same place, and that's where the implied volatility is saying that we can go to as well. So I like I said, the market's got to do a little bit of work for us, but I really like the upside in Netflix.
Right, understood. All right. Last but not least, I want to check out Uber, which is at $73 and change. Do we have high hopes for Uber here, or what, Mike?
I think I continue to be bullish on Uber. I think that we're more in a grinding type of pattern, and that's why I'm looking at a calendar here. So I'm going to sell. I'm going to sell some premium as we stay here or grind up. It's holding that 50-day moving average really, really well, and everything from a fundamental standpoint has been nothing but thumbs up for Uber.
Right. Okay. So sort of bopping around here, maybe some potential to the upside, Ben. Your thoughts on the chart?
Yeah, 200-period moving average still trending higher. So I think longer term, the trend is still biased and shaded to the upside. But you've got a little bit of a symmetrical triangle building here since the November earnings pop, or that October-November timeframe earnings pop up to that high. It's been squeezing down, and it's kind of coalescing right here about where the point of control is on the volume in the 71 to 74 range, which is coincidentally right about where it is today. We get a kind of an up and down, little bit of an equilibrium type of candle today, not a lot of push one direction or the other, but the bias, the inherent bias is that trend coming in, and that's that longer term uptrend. So you could see the breakout to the upside. I think the idea of a calendar spread, which is splitting expiration dates kind of near that same strike makes sense from the standpoint. Technically, sentiment, as the RSI is telling us, is really kind of at the midpoint. There's not a lot of push one way or the other. You've got a symmetrical triangle that's squeezing between support and resistance. So the question is, for Uber here, does it get a 5-star rating and break out? Does it get a 1-star rating and break down to that support maybe around the 64 mark?
Right. Okay. And your final thoughts here, Mike Shorr.
Very cool. It looks like Ben and I, come from the same school of thought. I'm not thinking that Uber's going to 100, but I do see a nice grinding pattern to the upside in this. Otherwise, it's not really a bear market. I'm not calling it a bear market, but a nice opportunity for this thing just to hold.
All right. Good to see you both. Mike Shorr, Prosper Trading Academy, and Ben Watson. Thank you both so very much. Always fun to take a look here at the big three. We saw Celsius, Netflix, and Uber today.